Look at this chart. Daily gold prices in US dollars are climbing. The story sounds powerful, the headlines are loud, and then the peak arrives. Hold the shape of that drop in your mind. Which year was this? By the end of this video, you will know the exact date. You will also see why this exact same chart shape appeared 11 separate times. The moments of loudest global hype often hide an identical short-term cooling. At Metlyz, we went back through daily gold prices in US dollars since 2019. We found 11 major high moments. For each one, we ignored the 6-month outlook and the year-end forecast. We asked a single question: what happened in the strict 30-day window after the rally? We measured 2 points. First, when gold entered an elevated zone, 5 kept rising, 5 moved sideways, and 1 fell within 30 days. But the second point, the selected final peak of those rallies, pointed the same way every time. All 11 fell within 30 days. In this historical sample, entering a record high zone was not the trigger for the drop. The short-term cooling appeared later, after the final peak of the rally. Consider January 2026. Gold reached a record high of $5,478 per ounce. Central bank demand had reached massive levels, and published institutional targets ranged up to $6,300 for year-end. Then, the short-term market environment shifted. Federal Reserve leadership speculation and dollar repricing entered the picture, strengthening the dollar. From that selected final peak, the maximum drop within 30 days reached minus 15.36%. The 30-day window closed down 3.64%. The long-term forecast had not changed, but the 30-day historical window was answering a shorter question. Long-term constructive narratives and short-term market realities can operate in complete opposition. In June 2025, the catalyst was different. Escalating tensions in the Middle East sent safe haven demands surging, creating a market supported by geopolitical uncertainty. Major banks were forecasting continued growth through the second half of the year. Yet from the selected peak of $3,441, the maximum drop reached minus 5.05%, within 30 days, closing down 3.25%. Safe haven demand was real, but a geopolitical headline may perfectly explain why an asset rose, while offering zero insight into the immediate 30-day market response. March 2022 provided a complex test. Russia invaded Ukraine, and oil hit 14-year highs in an immediate shock of conflict. Domestically, inflation was running at decades-long levels, prompting the Federal Reserve to prepare its most aggressive rate response in years. The market had every possible geopolitical and economic reason to buy. Gold peaked at $2,009. After that selected final peak, the maximum drop within 30 days reached minus 4.60%, closing down 3.83%. Even with these global catalysts, the 30-day window behaved just like the other 10 cases. The rally cooled, following the same trajectory seen in quieter markets. We see this consistency repeatedly. In September 2019, during heavy US-China trade tensions, gold peaked at $1,552, then cooled by minus 2.9% over the next 30 days. In May 2024, the price broke above $2,400 for the first time. The exact same pattern followed, yielding a 4.28% drop after the peak. From trade wars to modern institutional rallies, vastly different global eras produced the exact same short-term chart shape. Which brings us back to the mystery chart. That was August 2020. Gold had reached a historic high near $2,070, before moving down 6.74% in 30 days. This data was captured during the early months of the 2020 pandemic, a period marked by high safe haven demand and a shift in global logistics. Despite the scale of the global disruption, the 30-day chart still looked the same. The cooling pattern remained consistent. The pattern across all 11 historical cases is simple. Entering an elevated zone yields mixed results in the sample, but the selected final peak cools every single time. This is an analysis of historical data. It is not a future prediction, and it is not buying advice. Now I want to hear from you. Which statistic surprised you more? That first high zone entries were mixed, or that every selected final peak was followed by a short-term cooling? Tell me in the comments. In part 2, we look at the speed of the drop. Some cases took the full 30 days, while others dropped sharply in just 7. Subscribe so you do not miss it. Also, watch our previous video, What Moves Precious Metals, for 40 market surprises since 2019, and visit metly.com to explore live data. Long-term global narratives and short-term 30-day windows answer completely different questions.